Welcome to the daily update, where I'll go over the action in the market for Tuesday, September 30th, and we'll see how things look for Wednesday, October 1st. Okay, about 30 minutes before I started recording this, apparently we're in a government shutdown. This one seems to be a little bit different than other ones, so we'll have to see how that plays out. The futures are down a little less than 0.5%, but Europe hasn't even opened as I'm recording this, so we'll see. Usually what has happened in the past is that there's some kind of a knee-jerk reaction that is short term. And I remember back in 1995 where there was a government shutdown that actually lasted for a while, and there was a delay on the government reports. And so that really kind of threw a wrench into the stock market. And so, yeah, it's a political maneuver, but there's some little different twists this time that might have a bit more ramifications. Now we're looking positive in the stock market though, but we're looking extended with some of our indicators. We haven't really built up a positive conviction in the short term. We're improving and we had an up day and that's helping our charts look a little bit better, but we're also looking a little stretched out when you measure how far away we're getting from the 200-day simple moving average. But we've been here for a while and it hasn't really led to anything. So we're done with September now, and we ended up having a positive September. We were looking for possibly a decline in July. That didn't happen, and August, and it didn't happen in September. Are we going to get any kind of a pullback in October? We've had really down Octobers, big crashes, 1929, 1987, just to name two. But we've also had really good Octobers, and the first part of October is historically a pretty good, it's about the third best half month of the whole year when we look at statistics going back to 1950. We'll see. It's like the market's been doing reverse lately of what seasonality would normally dictate. Now that we're looking more positive, is that going to turn things more negative? We don't know. We'll just follow the charts, make our decisions and conclusions day after day after day, not really trying to forecast, not trying to think this is what's going to happen. We just act on things that already are happening based on what we can see. Okay, so right at the open, we did have a lower open, and prices really chopped after the open. Between the unchanged level and the daily pivot, they were just about equal with each other. The daily pivot was at 66.61, and then we dropped down to S1 at 66.45. Then we finally got all that chopping done, and we climbed up from S1 above the unchanged level and daily pivot. We actually got above R1 at 66.78 and we closed at the intraday high. So we saw a lot of choppiness early in the day. We saw some more convicted buying coming in later on in the day and closed really just at the high. We were up just 0.41% though. It looks a little more dramatic when you see it on the chart. We've been seeing small percentage moves lately. So when we do get kind of a move like we saw on Tuesday, it looks a little bit more pronounced. And we were above average with volume, so we did see an increase there. Now we are positive on all three time frames, short, intermediate, and long term, as measured by the moving averages. Interest rates didn't change all that much, and we're wondering, are we going to get the employment report on Friday because of the government shutdown? We'll see. Now, I don't have inside information on this, but you would think, okay, that's a pretty complicated report. You would think they've already crunched the numbers, and if they're not going to release that, it's like, okay, is there some kind of a game going on here? But that's just a personal opinion with very little fact to back that up. And then, of course, you've got the things developing in the Middle East with some kind of a peace deal happening there. That's kind of a big one. That could really change things in that part of the world as well, but not really impacting the market. And then, of course, you have the continuation and escalation over the weekend between Russia and Ukraine. So the S&P just for the month of September was up a little bit more than 3.5%. I'm just rounding it up to the first digit here in the decimal. And the NASDAQ was up 5.6%. The Dow was up 1.9%. So we didn't see the weakness that we typically see in September. And that's why we don't see 100% this or either up or down, there's always a percentage that goes against that. And this was one of those percentage times where we actually did something different than what we seasonally have seen. And I have here government shutdown looming. Again, now this is when I was preparing this. Apparently, there is some kind of a shutdown going into effect right now, and the economic reports may be delayed, some of them. Now, there was some Fed speak. Fed Chair Philip Jefferson, who was a voting member, noted downside risks to employment and upside risk to inflation, which is pretty much what the Fed's been talking about. So that's nice and ambiguous there. And then Fed President Susan Collins, who was also a voter, said modest easing could be appropriate, but a restrictive stance remains warranted. So they're trying to hedge both sides here at the same time. Chicago Fed President, who's been kind of speaking out a little bit, Goolsbee, who's also a voter, said he's not overly concerned about the labor market. All right. You just got to imagine what it's like to get these people into a room and have them start talking to each other. I'm surprised that they, it's probably a good thing they don't allow baseball bats in there. So we're seeing a little bit of an improvement in the short term with the conviction. We have the Williams percent R, which is now it's showing positive conviction, but that's the only one. Our other short-term charts are improving, but they're not looking like strong conviction right now. And then the stochastics chart, which is pretty much on here every day. And we're getting far away from the 50-period moving average again, as measured by the boom indicator. And we'll see, is this government shutdown going to change the overall scenario? Of course, we're going back and forth. And the market got a little bit concerned last week when the economic reports started coming in stronger than expected. That throws these rate cuts more into doubt. And the dollar was down, interest rates were up. We just ticked up to 4.15%, where we had been at 4.14%. And we did decline. It was about 8 basis points down. We started the month at 4.23%. We closed at 4.15%. So stocks went up, interest rates went down in September. We haven't changed as far as sentiment. And you can see under the surface, you look at the index and what it's telling us, and it's going up and it's looking positive, but we're still not seeing a lot of internal strength inside the S&P. And you've got a lot of folks that are still, they're not really sure what's going to happen here. They're not really getting more positive as far as sentiment. They're not really getting more negative. We're just in the middle right now and unchanged on the day. And we are positive with the trend, but we're still below the moving average, both on the short term and intermediate term. We haven't started to see a strengthening trend, but the weakening trend that's there is still positive with the green line above the red line. With the up day, the bias is positive, and I'm still keeping the momentum at mixed. Now, if you look at it just at the index level, I probably could have changed that to positive. When you look internally, that's why I'm coming up with a mixed conclusion. Okay, so we did get consumer confidence, came in lower than expected at 94.2. They thought it would come in at 96. Last time it was at 97.8. When you go back a year ago, it was at 99.2. Chicago PMI, more regional, up, or actually came in with a reading at 40.6, which is less than the 41 they had expected and down from the 41.5 that came out last time. FHFA Housing Price Index down 0.1% month over month. Last time it was down 0.2%. The Case-Shiller Price Home Index up 1.9% year over year, which is what was expected, but down from the annualized rate of 2.2%. And job openings came in at 7.227 million. That's a little bit more than we saw last time, 7.208 million. Okay, so here is consumer confidence, and they break it out into three ways. How's the total reading right here? That's the blue line, which is coming down. And then how are people feeling right now? That's the purple line. And then how are people looking out into the future? That's the yellow line. So we saw a decrease pretty much across the board. And these move more in tandem with each other. The FHFA Housing Price Index, we do see this coming down according to this measurement here. Also, a little bit of a drop off with the Case-Shiller 20 City Composite Home Price Index. And then we're seeing a drop off here. This is the year over year look at the Case-Shiller Home Price Index, where it is declining overall. And then the Chicago PMI, which seeing a little bit of a drop off there. So when you take all these together, we're seeing a little weaker than expected economic reports this week. But these aren't the ones that really drive things. This is more just getting a gauge on the overall economy. And this is another way that they try to measure things here. Home prices. The median sale price of starter homes hit 260.5, that 260,000 in August. It's up 2.2% from a year earlier, and it's leveling off a little bit, but it still continues to go up. And then the job openings here, we did see a bit of an increase over the previous reading. And remember back not too long ago, we were up into the 10 millions, then we dropped to the nines, then the eights, now we're into the sevens as far as job openings. Now, looking at Isabel Net, we have our weekly overbought, oversold composite, still getting a very high reading. It came in over 90 last week. We dropped down a little bit to 89. You could round that up to 90 as well. So this is still showing that things are overbought. Then new highs in September are a good sign. These are the statistics when we did have up Septembers. And what was the average return in October? That was positive 0.8%, not always. And the median return was 1.2%, and we were up a little less than two-thirds of the time. But then when you look at the whole quarter, when you take October, November, and December, things look a little better if you hold on a little longer. 4.7% with the average and the median up almost 91% of the time here. And then you can compare them to the other years. This is trying to bring this out to see how we're performing right now. Then the equity positioning still above zero, kind of haven't really moved all that much here, but folks are still more long stocks than anything else. And we're seeing a real drop off in the heavy truck sales. We've been going up with the S&P. This has been coming down. We've been seeing this now for quite some time. Maybe it's drones, maybe it's different ways of shipping, what have you, but we're not seeing the stronger sales like we were before. And then I'll probably keep this chart in the video for a few days because we're starting to head into the blackout period. When companies report their earnings, they can't come out and say stuff. So buyback should temporarily diminish, not stop, over the next 3 weeks as companies enter blackout periods heading into earnings season. And then it'll hit the top here, right, just about up into the middle of October. And they can't really come out and say too much about what's going on with that, and then it will drop off. It's a big bell curve here that you see. And then discretionary versus systemic types of strategies, as I try to point out every time, because we see charts like this quite often. The blue line, that's when you follow a system. You're not really trying to time the market. The blue line is continuing to go up. Where those folks that do use discretionary, they try to time the market and get in and out, that tends to underperform because we've been seeing so much negative things. I mean, we had negative seasonality, that didn't happen. We're seeing internal weakness in the S&P, it keeps going up. So, and folks are like, okay, we're not really sure about what to do here. And when the market isn't really moving, or when it is really moving up, the systemic type of approach tends to outperform. But when we go down, the discretionary approach tends to hold up better. All right. And then thinking about the current Fed easing cycle from now until it ends, do you expect the 10-year yield? What will it do? And this is just different folks thinking what will happen, with most think that we'll be down 1/4% to anywhere. We could go down to 0.5% here. That's overall what people are thinking, that we're the Deutsche Bank surveyors here. And then this is something that we see quite often too, just showing how the US stock market continues to be overvalued. We're overvalued when we get above 20. Right now we're at 22.8, and then that compares this with the rest of the world. And then another thing, again, context, and I show this chart periodically as well. Why would the Fed be cutting rates? Is it to tweak the economy? That's what it appears to be right now. It's not because the economy is falling apart. When the Fed comes in to cut rates to try to save the economy, we see underperformance. When they come in to try to tweak the economy, that's when we see the S&P doing much better. All right, and gold, it just keeps going up. It's making all the gold people really happy right now because they, for decades, kept saying what's happening now was just around the corner, and now that it's here, they're like giddy with the light there. But we're really going up with gold as well. And then core U.S. payrolls. Now this is right down around the zero line, and so we don't know if we're going to get the employment report or not. But it says it's rare to see periods like this one we're in now, where employment is flatlining. By rare, I mean it's literally never happened. Worse, when the indicator slips below zero, it has always, in capitals, been the start of a material contraction in employment. We're just kind of hanging out here, right on the edge, according to Dario Perkins from TS Lombard. And then this is just a historical chart, just showing, okay, what oil has done and then what OPEC Plus has done along the way and how that has an impact on oil prices. Weekly ETF flows, seeing more money going into precious metals. Folks are starting to chase that a bit more now, where we are seeing some money actually coming out. And the money that's going in, it's not measuring up to what we're seeing going into gold here. And retail activity said Citadel Securities retail, and these are folks that buy stocks through Citadel. The seasonal demands trends from the last 8 years, September is the weakest, October builds, November is the strongest. So a lot of folks just assume that we're going to go down in August and September, and then they think we're automatically going to go up in October and November. So then they come in and start buying things again. And that didn't happen this year. So are we going to see a bit of a different play? It says activity picks back up in the fourth quarter, with November being the strongest month of the year. All right, here is the intraday chart. Really choppy right after the open. Bit of a lower open. We had the unchanged level on daily pivot to the upside. We pretty much held at the S1 support level here to the downside. And that's what happened during the early part of the session. And then later on, we finally got down here to S1 again. And then instead of going back up and stopping at the unchanged level, we kept going and got above R1. We didn't quite get up to R2, but we did close at the intraday high. So we saw some late day buying. And we are down about, I think I said 0.4, maybe 0.5%, about 0.5% with the initial overnight session with the futures. We'll have to see, how Europe opens and everything like that. But the futures were really pretty quiet. And then we saw most of the declines happening early in the session down here, and then the late day push that we saw going up. And this is a little bit of a concern, but we like the fact that both the blue line and the red line are going up, but we don't like that the red line's above the blue line. That means value's outperforming growth intraday, and not really seeing much of a change here. To be up with the S&P and see the intraday growth to value ratio for the S&P pretty much going sideways, even when we were going up near the end of the day. So growth did outperform on a closing basis here. When we compare it to value for the large caps, it was up less for the mid caps and about even to slightly less for the small caps. So still a little bit of a concern here with our small cap growth to value ratio. Small caps have been going up. This ratio for the most part has been going down. This has held up a little bit better, but we're not seeing really any strength in the mid caps currently. It's just a lot of sideways action here, but at least they're above their 50-day moving average with the growth to value ratio, and we're still below the 50-day moving average with S&P growth to value. Here, if we're really getting ready to go up here, we want this ratio to be going up, and it's not doing that right now. It's actually showing a bit of a negative divergence. And still holding up okay, but not breaking out here with this growth to value ratio. We declined a little bit with discretionary to staples, but overall, this is the better looking ratio. It's further above its moving averages. So looking at the trend, we are trying to turn up, but we haven't crossed above the moving average in the short term, but we're positive with the green line above the red line. And trying to turn up in the intermediate term with the green line above the red line. So we're positive, but it's not really showing a strong trend, or at least a strengthening trend. And we were slightly above average here with volume, a little bit of a pickup based on what we've been seeing recently. So here is the gamma exposure. Not really seeing this as much of a big deal right now. We're kind of looking at 6,700 to the upside, so that may provide overhead resistance. But then if we really start to fall, we're looking at about 65.96 or so as a possible support area before things turn more negative according to the gamma exposure chart. And not really seeing much of a change here with the VIX, both on the line chart and on the bar chart. Not seeing any seasonality, a pickup in the VIX, which typically we've been watching for this going back into August, and it just hasn't happened. And not really much of a change here with the VIX of the VIX. We're hanging out right around the moving averages. We closed a little bit below them with the line chart. This is still a concern, though. This is picking up some fear that we're not getting in the other index or gauges that we look at. we're going back up again with the VIX to S&P 500 correlation. We thought we had topped out. We came down a little bit. Now we're starting to go back up. And again, when we finally top out and come down, you can see the areas that I marked here. And quite often that meant some sort of a decline, not necessarily a reversal, but just some sort of a decline to kind of shake things up. And we're still seeing the moving average here with the volatility of stocks to bonds. We had been declining for the most part. Now this is continuing to go up. And we declined with this fear gauge where we went up with the other fear gauge. So we're not really seeing a confirmation there. We did see a bit of a pickup here with the daily equity put call ratio chart. We are going back up after getting extreme here with the 5-day chart. So we're below this line here, not extreme as we've been in the past, but we are starting to go back up now, but it's still extreme negative. And we're just finally starting to turn back up with the 10-day moving average of the equity put call ratio. This had been declining, getting to kind of a low level here. And it's seen as positive when this is declining. It's seen as more negative when this starts to go back up. And then this, our risk on to risk off ratio, we're going up with the S&P, but this ratio continues to go down. You would expect just the opposite of that on an up day. Also, we're continuing to decline here with high beta to low beta. Going up with the S&P, this was down 0.5%. And normally it would be just the opposite of that. But getting a pretty high reading again here with volatility risk premium above the band. This is similar to what we saw at the latter part of July, right before the employment report came out. And then we took a bit of a dump here right at the beginning of August. We came out of that, but we're wondering, is something like that being set up right now? Advanced decline lines, though, are looking pretty good. We were up and possibly setting a new all-time high here based on price. Volume still continues to perform better here. It's actually going up and setting another new all-time high. And we're looking more positive with the advanced decline ratio, both in the short and intermediate term. We're seeing some improvement here with the advanced decline oscillator. We're still making note of these negative divergences as we were going up with the S&P. We were setting lower highs here. This is showing some improvement. And we're seeing a breakout in the new highs. So we're finally turning back up with the 5-day chart and the 10-day chart. So this internally is showing some strength now. And our smart money indicators are improving. We're positive with accumulation distribution. We're barely above the moving average with the boom indicator. This chart is positive. And this, well, we're not really improving here. We're still pretty much flat with the Chaikin money flow. You could make a case that maybe it's going up slightly. But we are looking better here with the Chaikin oscillator. We're above the moving average and going up. However, we've gone above this red line. This is when we start to watch it even closer. When we get more concerned is if we make our way all the way up to the green line. But this, again, an up day, and we're seeing the vortex green line coming down and the red line going up, but it's still positive in the bigger picture with the green line above the red line. And volume for the S&P, not really breaking out here much based on price, but we are still showing an improvement here based on volume. And the only advanced decline line that's still looking somewhat positive is the S&P. We're above the moving average, but we're still below it with the NYC common stock, the mid caps, and the small caps, even though there were slight improvements. And we're back above 50 here with those stocks above their 20-period moving averages in the S&P. Still seeing these longer-term negative divergences. A good upward thrust here could take that out. But in the meantime, we have to say, okay, is this going to set another lower high here? And also a bit of an improvement with the 50-period moving average study, 100-period moving average study, and the 200 as well. So we're kind of back up to this dashed line again. That was pretty much where we stopped, and that's for September. Now, it can still come into play, but once we get into October, now some new pivot points come into play. We'll see if we can make it all the way up to this R1 pivot point as overhead resistance, and we were above average with volume. A bit of an improvement above 50 with the 20, 50, and 200 period moving averages on the S&P. Crossing a little bit above the midpoint with the Stochk RSI, but here's the Williams percent R, where it's starting to show some positive short-term momentum. We are improving with the CCI charts, but we're not extreme yet with the CCI 14 and CCI 20. We are improving with the short-term stochastic. It's now extreme again. We're turning back up with the intermediate short-term. We're still extreme here, but we're declining with the long short-term stochastic. Trying to get a little bit above the midpoint with the force index. That's slightly more positive. The condition of the short-term trend based on 20 periods still looking pretty good there. The green line and the blue line going up. We're still above the 20 period simple and exponential moving averages. If we start to decline, we'll be watching this as a level of support. And we're in the +2 channel, getting to the upper end there with the standard deviations chart. And we are improving with the balance of power. We're above zero and going up there, so that's positive. But we're still negative with the TTM squeeze. We declined and we're seeing the darker blue bar, and we're just not looking as positive as we were before. Now, this is a monthly chart, so I can only show it here. We're actually seeing things improve, where going back to the end of 2024, we saw the monthly chart of the TTM squeeze declining with the darker blue bars here. We're improving now. It's turning to the lighter blue and actually showing a bit of an advance. So it's picking up some longer term improvements. And we're on day 106 of the Landry Light uptrend. We're on day 99 of the proper order uptrend. And we're still coming up to the upper end of the highest high value here, even though the blue line is flat. We haven't really set a new high yet, but this is still positive since we're above the midpoint and the midpoint's going up. We are back above the 10 period simple moving average here, and all three lines continue to go up there. The intermediate term trend still looking okay. We're kind of right in between the red line and the blue line, but enough to keep those lines going up. And we're above all the plotted moving averages here. That's positive. We're not too far away from the 20 period moving average. We're close, but we are getting kind of far away from the 50 period moving average. That's what the boom indicator tries to measure here. And we're over 11% now above the 200-day simple moving average. We might get up to 12, 13, 14%. That's when this starts to look more overextended to the upside. And just continuing to trail along with the ease of movement and a little bit sideways here with the Arun indicator. Bit of a drop off with the buyers, bit of a decline here with the sellers. So the oscillator is above zero, but it had declined and now it's starting to flatten out. And we're above zero with the S&P McClellan oscillator, and that's been showing some improvement there. So we're going up with the summation index based on price and volume. We did improve again with the NYSE McClellan oscillator, but we're still below zero. So it's still negative when we look at the summation index based on price and volume for the NYSE. We're positive with the Swanland trading oscillator, advancing based on price and volume. We're seeing momentum. It's getting a little mixed up here because it was picking up this positive up move, and now it's still trying to wonder, okay, this downward move that we saw, is that going to get dealt with, or are we going to start to go back up? So the PMO is pretty much on top of its moving average. We're still seeing volume outperforming here, where price is improving, but still below the moving average. And we are getting back above 50 with the PMOs that are rising. We're still below 50, but going up with the buy signals. We're leveling out here with a fairly high reading here with the PMOs that are above zero. And we've gone from neutral to positive with the Elder's Impulse system. We're still negative, though, with the parabolic SAR. And just kind of rolling over a little bit here with the slope oscillator and rolling over a little bit, but pretty much on top of the moving average with the MACD. So we are seeing some general drifting down here in the short and intermediate term, but we are still looking positive with the tricks and the KST. But we haven't actually turned to more of a convicted negative with our momentum oscillators. And just a little bit below the moving average now with the Copic curve. So our momentum oscillators are weakening, but not full-blown negative, at least yet. We are above 50 with the money flow and the ultimate oscillator. We're still above the moving average with on-balance volume. We leveled out here. We're still looking okay, though, with the Sean trend meter. It's in the green area. We get more concerned if it goes up into the darker green area. And we did improve. We're above 50 with the intermediate and short-term RSI. And we went up a little bit here, but not quite back above the moving average, still with the bullish percent index. A little bit of a decline, actually, with the NYSE bullish percent index, but a little bit of a tick higher with the NASDAQ 100 bullish percent index. We're still looking good here with our weekly chart of the S&P. Right now, we're up 0.67% on the week. We'll see if we can hang on to that. And we're still a little bit above this upper line here with the trend channel going back to 2009. So some of our trend charts are still positive here. The Heiken Ashi is positive. We're positive with the Kagi chart. We're positive with the Renko, but we're still negative with the three-line break. It hasn't picked up this upward move, at least yet. Long term, still holding in there okay with the 150 and 200 period moving averages. positive on all time frames. We had gone negative with the mid caps. We're now back to positive with the mid caps in the short term. The dollar is now back to being negative on all three time frames. And we saw some of the areas like healthcare, which is just not seeing any love much, at least consistent love. It gets a little bit here and there. Saw a little bit of love there on Tuesday, but it's just been really underperforming the S&P. So you've got some folks thinking, okay, let's go in and buy some bargains. And then it doesn't do anything. And then we have another good day here, but it was the strongest sector. There was also some news coming out that kind of helped the overall healthcare sector, but then you see things like tech, it was up, but not really showing a lot of conviction there. Then we had communication down and discretionary was down. So started off okay here with the utilities setting a new 4-year high. Again, Canada set another 4-year high. Then later in the day, we had a BPI cross below 70 with the tech sector. But then later, still, we had the NASDAQ going above 22.6. And of course, gold setting another new all-time high. So we saw some green in here. NVIDIA held up pretty well and it helped the semis do all right. But Google really wasn't doing all that much. Meta ended up being down. Amazon was down. Tesla was up just a little bit there. So not really any across the board positive or negative action here. The most positive area, this is why the healthcare sector was up as much. There's an awful lot of green in this sector. So the Dow still cannot get above this dash line, which is a pivot point. It's been really battling that, and we've not been able to close above it. We are still positive with the diamonds with the Elder's Impulse system. We are above the pivot point here with the NASDAQ, and we're still neutral though with the NASDAQ with the Elder's Impulse system. We're right a little, just a tick above the overhead pivot point here with the NASDAQ 100, and we continue to be neutral. Momentum, it hasn't crossed over negative yet, but it's not showing a lot of positive conviction now either for the NASDAQ 100. We're still above this upper trend line, and we've been above this now for quite some time with the weekly chart of the NASDAQ 100 going back to 2009. Now we did look better when you look at the equal weight S&P. That actually went up here, and we're actually setting another new all-time high with the QQQ equal weight. So parts of the market are looking pretty good, but it's not the really big stocks that drive the indexes, at least in Tuesday's session. And we were up barely here with the S&P's 600 small caps, up a little bit more than that. Still looking okay as far as the chart pattern here with the Russell 2000 small caps, but not showing an awful lot of strength. Still neutral with the small caps with the Elder's Impulse system, coming right about up to this pivot point here with the mid caps. So, but barely up 0.07%. And we're neutral with the mid caps with the Elder's Impulse system. We did improve 1/3% with the Wilshire 5000. We were up at 0.3% with the total US stock ETF. We were down almost 0.5% with the financial sector, and we're still underperforming the S&P 500 with the financial sector. Down just a little bit, but virtually unchanged with the FANG index, but it did close up off of the low. So Apple was up fractionally a little bit. We had Amazon down over 1%. Google was down 0.39%. Microsoft still dealing with its 50-day moving average up 0.65%. Down 1.21% with Meta, dropping a little bit below its 50-day moving average here. We were up 2.6% with NVIDIA, and that might be a closing high there. So that's giving some confidence to the market that way. And then Tesla was up just 1/3%, but it's been seeing a pretty good run lately. And Netflix continues to drop off, and it's going down here, down 0.62%. We are breaking out just a little bit here with the Dow Jones Semiconductor Index and the SMH Semiconductor ETF. They had pretty good days there. And a little bit of a turn back up after declining with the relationship between US and world stocks. Still pretty much flat here with the longer term correlation. We are dropping with oil. We're getting down more into the lower 60s now. And we're in a downtrend with the US dollar index. And we did come up just a little bit, but not much, with the 10-year yield. And we were down just a little bit here with the 10-year based on price. Still looking okay with the Qs to S&P growth to value ratio, but we're below the moving average with discretionary to the S&P. We turned up and we're above the moving average when we compare large cap growth to value. So we're trying to come back up to the declining moving average with the large caps. We're still above the moving average with the mid caps, still below a declining moving average with the small caps. So we are still positive on all three time frames, and I use moving averages to determine that. We're above that longer term support on the weekly chart, and we're seeing a possible building of the short term positive conviction. And then we're going to get the MBA mortgage applications. We get that every week. ADP employment change. So now we're going to get some employment data. Construction spending will be coming out. The big one is going to be ISM manufacturing. And then anything geopolitical. And there's lots to pick from, but the market just isn't really all that enthused about that. Then on Thursday, we'll get the weekly jobless claims and continuing claims. And then maybe on Friday, we're supposed to get the employment report, but then the ISM services will be coming out as well. And there might even be a maybe with the jobless claims. That might even be delayed also. So here's what's supposed to happen in Wednesday's session here. Seasonally, though, we look at October 1st, going back to 2002. We're neutral to positive with the Dow and NASDAQ, where we are positive with the S&P. So October 1st for the S&P tends to look a little better. When we look at October, going back here, the last 74 years, we do see that October performs fairly well, up 59% of the time, down 41. So more of a lean in the positive direction, and then I'll deal with the options expiration when we get closer. So here's the new calendar where this is the first trading day. We do see some positive seasonality here that can last for a few trading sessions before it starts to trail off. The first half of October, third best performing half month going back to 1950. Then further down on the list is the second half of October. And this is longer term where we're trying to match up here what the S&P has been doing. I've been showing this chart the last few videos here. We have the post-election years since 1985. That's the green line. And so far, we've been outperforming that. We've also been outperforming the aggregate stock traders almanac cycle and then all post-election years taken together. So we have been outperforming. And then when we look at October going back to 1950 during a post-election year, we do see a positive return. And we're up 11 out of 18 times, down 7 out of 18 times. So what are the warning signs? We're still negative with the NYSE McClellan oscillator. So that's sending the summation index down. The parabolic SAR is still negative, and we haven't really crossed back above the bullish percent index for the S&P. Now, on the positive side, even though you could put the Chaikin money flow, it's pretty much flat. It is showing some improvement there. We did see an improvement with the accumulation distribution, both the longer term and the shorter term boom indicator. The Chaikin oscillator is positive, but now starting to look extreme positive. The growth to value ratios still holding up in the bigger picture, but seeing more shorter term weakness now, and discretionary to staples. Also, that's one of the better looking ratios currently. We're drifting off here. We're weakening with our momentum oscillators, but they're still technically positive. And then we are positive with the McClellan oscillator and summation index for the S&P. So on the trading oscillator is positive. And then because we're above 50, the NASDAQ 100 and NYSE bullish percent indexes are positive. Ease of movement, money flow, ultimate oscillator, and vortex are positive. We're still barely hanging on to being positive with the momentum of the NASDAQ 100. And we are positive with the financial sector, but as I've been saying now for months, we continue to underperform the S&P. And then the long-term special K daily chart and weekly chart, they are both positive. Here are the pivot points for Wednesday's session. So the conclusion is we're positive and we're above support. All right, we're a little bit concerned. We're not really seeing anything. It's more in the intermediate term. In the short term, we're seeing more positive conviction develop. If we fall, we'll still be watching those 20-period moving averages. This is where we're seeing some differences. More of our intermediate term indicators that are based on the S&P, they're doing okay. But then some of the measurements that we look at inside of the S&P, they're improving, but not really showing an awful lot of strength either. And in the long term, we are positive, but we're 11% now above the 200-day simple moving average. Thank you. I hope you found this helpful. Have a really good day, and I will talk to you in the next video.